Hello everyone, welcome to lecture 4 of module 6 with regard to fund flow analysis. In this lecture, we are going to deal with two types of problems that are the step number 1, the preparation of the schedule of change in working capital, and the second one is the computation of funds generated from operations. That is the second step in the process of fund flow analysis. To start with the practical problems, the first problem is given in the slide is you are required to prepare a statement of change in working capital from the following information. When we are talking about the statement of change in working capital depicts the change in current assets and current liabilities. So we are going to make a statement for the same, statement of change in working capital. The first will be the column of particulars. Then we talk about the previous year. Then we put the figures from current year, and comparing the both, we find out the increase in individual asset or liability or decrease in asset or liability. Then finally we will compute the change in working capital. That could be the increase or decrease due to the change in the current assets and the current liabilities as given in the question. So first we take up the current assets. As given in the question, the first current asset is stock. The amount of the stock in the year 2021 was 2 lakh, and in the year 2022 it was 3 lakhs. So after comparing this figure, we know that there is an increase of stock by rupees 1 lakh. As already discussed in the previous slide, that the change in current asset will have the direct impact on the working capital. So the increase in the stock will result into the increase in working capital by rupees 1 lakh. The second asset is debtors. The debtors in the previous year is 1,50,000 and the current year is, the figure is 2 lakh. Again it is showing an increase in the debtors by 50,000 rupees. And this 50,000 have a positive impact on the working capital. So it will again have increase in working capital of rupees 50,000. Then the next asset in the line is cash, which is 80,000 in the previous year and 50,000 in the current year. It shows a decrease of rupees 30,000. So this decrease will also have an impact on working capital in the terms of decreasing working capital by 30,000 rupees. Then the next asset available under the heading of current assets is bills receivables. Which is 90,000 and 80,000. There is a decrease in the bills receivable of 10,000, mean there is a decrease in working capital by 10,000. After that, we will sum total the current assets of previous year as well as the current year only. The total of current assets $5,20,000 in the previous year and $6,30,000 in the current year. Now moving further, now we discuss about the current liabilities and its changes. The components of current liabilities given in the question are trade payable, in the previous year trade payable was 2,50,000 and in the current year it is 2 lakh, showing a decrease of 50,000. As we know that this decrease will be having a positive impact on the working capital. So we put it in the increase column, 50,000 increase in working capital. Next is interest payable. Previous year 50,000, current year 60,000. There is an increase of 10,000. This increase in current liability means there will be a decrease in the working capital 10,000. Then next is given in the question is dividend payable. Previous year, current year, increase, decrease, change in working capital, increase and the decrease. Dividend payable given in the question is 80,000 in the previous year and current year it is 60,000, which means there is a decrease of 20,000, hence it will be used in increase in working capital 20,000. After this we will make a total of the current liabilities. Total current liabilities are previous year 3,80,000 and in the current year the total is 3,20,000. After this we compute the working capital. This working capital is current assets minus current liabilities. As we have already totaled the current assets of the previous year 5,20,000, out of that we deduct 3,80,000. So we have the working capital of 1,40,000. Similarly, in the current year the assets are 6,30,000 and the liabilities are 3,20,000. So the difference of the two is 3,10,000. Now we calculate the increase or decrease in working capital. As we can see from previous year 2021, now there is an increase in the working capital with the amount of rupees 1,70,000. So we can make a total of previous year and current year equal to each other. Now going to the increase and decrease column, which is related to the working capital, we may note that the total of increase in working capital is coming to 2,20,000 and the total decrease in working capital is just of 50,000 rupees. 30 plus 10 plus 10, 50,000. So when we consider this 50,000 in comparison to 2,20,000 to make the total same, we reaches the figure of increase in working capital of rupees 1,70,000. This is how the schedule of change in working capital is prepared. So in the continuation of the same, we will have one more problem relating to the preparation of the statement of change in working capital from the following information. Using the same format, particulars, previous year, current year, increase, decrease, increase in working capital and decrease in working capital. This is our statement of changes in working capital. Starting the same process, we first take into consideration the various current assets as given in the question. So the first current asset is inventory, which was given in the last year 2,50,000 and in the current year it is 3,50,000. So calculating the difference, we can see there is an increase in the current asset, that is inventory, by rupees 1 lakh. So it will have increase in working capital. Next asset is debtors, which was given in the last year 2 lakh and current year figure is 1,50,000, means there is a decrease in debtors, hence there is a decrease in working capital also 50,000. Then we have next current asset is cash, 75,000 and 60,000, showing again a decrease of 15,000, mean decrease in working capital of 15,000. And next asset is bills receivable, 95,000 in the last year as mentioned here, and now it is 1,25,000, showing an increase of 30,000. Increase means we put it in the increase in working capital 30,000. And the last asset is prepaid expenses, that is 10,000 and then 7,000. It means there is a decrease in the prepaid expenses, so the working capital will also show a decrease of 3,000 rupees, making a sum total of the current assets. Total current assets happens to be 6,30,000 and it's not 6,30,000 and the other total is 6,92,000, showing there is an increase in current assets for the time being. Moving to next to the computation of current liabilities in the question. So using the same format, current liabilities in the previous year is 3,50,000 in the name of the creditors, and in the current year it is 2,20,000, showing a decrease of 1,30,000, means its impact will be different from that of the current asset. So it will be shown in the increase in working capital 1,30,000. Next is short term borrowings. Previous year 70,000, now it is 85,000, mean there is an increase in the short term borrowings leading to the decrease in working capital by 15,000. Next is bills payable, 88,000, 62,000, leading to again a decrease of 26,000, increase in working capital by 26,000. Then we have outstanding salary 12,000 and then is 8,000. Again there is a decrease, so it will have an impact of increase on working capital, making the sum total of the current liabilities 5,20,000, 3,75,000. Now we calculate the working capital, which is current assets minus current liabilities, which comes to 1,10,000 and 3,17,000, leading to again an increase in working capital with rupees 2,07,000. Now we can balance the previous year and the current year in the same fashion, 3,17,000. Now going for the change in working capital, the total of increase column in the working capital is showing a total of 2,90,000 after comparing it with the decrease column, we found the same difference of 2,07,000. So this is how you can easily prepare the statement of change in working capital. Moving to the next step, the second step in financial statement analysis is the preparation or the computation of funds generated from operations, for which we use to prepare the adjusted P&L account, or we can say we can prepare it in the form of statement. So from this question we are required to calculate the funds generated from operations. So for that calculation, funds generated from operations, we have three different columns. One is with regards to the details, and then another column is of final amount. Here we will put the particulars. You can draw the three columns and can solve it easily using the statement in the question which is given, and it is showing the net profit in the end is amounting to rupees 2,42,000. So we start with this figure of net profit. So first we consider net profit as per profit and loss account, which is given 2,42,000 rupees. In this, we will add up non-operating and non-fund expenses and losses. So when we deal with this question, you can see the first item is depreciation amounting to rupees 20,000. So we know that the depreciation is not going to be paid to anyone, so it is non-fund item. So we added 20,000. The next is loss on sale of building. As it is not a part of day-to-day of business operation, so it is non-operating expense. Again we added back with amount of rupees 15,000 as given in the profit and loss account. The next is goodwill written off. Non-fund item, goodwill written off with rupees 12,000. Then similarly, discount on shares written off 5,000, and the last is the transfer to general reserve 6,000. So the total of this 58,000 will be added to 2,42,000, and it comes to rupees 3 lakhs. Out of these non-operating and non-fund expenses and losses, we will deduct similar fashion non-operating and non-fund incomes and gains. As per the question, we are only given one profit on sale of plant, which is our non-operating income. So we take it profit on sale of plant. The amount is 50,000. So nothing more is left. So we take it to the last column. So the final answer we found is the actual funds generated by the company from operations, amounting to rupees 2,50,000. Moving ahead, another question to calculate the funds generated from operations with the information provided as per the profit and loss account. Moving with the same steps, we start with the calculation, a statement of computation of funds from operations, your funds generated from operations. We draw the three columns. One is of details, another is of amount, the final amount, and the particulars, starting similarly with the balance as given in the profit and loss account. So, we have the net profit as per profit and loss account, which is given 5,72,000. Again, as we discussed in the last question also, we will add those items which are non-operating and non-fund expenses and losses. As per the question, salary is an operating expense, office rent is an operating expense. We start with the point depreciation on plant. So, this depreciation on plant is a non-fund item, 45,000 in amount. Then next is given transfer to reserve, again a non-fund item of rupees 20,000. Then we have loss on sale of machine, which is non-operating expense or non-operating loss. So, we will write it down, the loss on sale of machine given in the question is 16,000 rupees. Then next is goodwill written off amounting to rupees 38,000. Then loss on the sale of investment, non-operating, amounting to rupees 24,000. And the last is provision on taxation, as commission is again a business part. So, we will discuss about the provision for taxation in this part. So, we go with the provision for taxation that is given in the question 40,000 rupees. So, the total is 1,83,000 and the total up till now will be 7,55,000. Moving ahead with, now we are moving to the right side, which is the right side of the P&L account. According to that, now we will treat less karenge out of it is the non-operating and non-fund incomes and gains. So, the first is given gain on the sale of building, which is 50,000. Then there is given interest received. It is not a operating income, so we will deduct it from the profit. It's interest received, not a part of the daily operations of the business. So, it will be taken into account. Similarly, the dividend received is also taken to be deducted, amounting to rupees 40,000. Then in the question we are given refund of taxes, non-operating tax refunds amounting to rupees 22,000. And the last is the appreciation in the value of land, which is a non-fund item. Appreciation in value of land amounting to rupees 28,000. So the total of non-operating and the non-fund incomes and gains is rupees 1,60,000 after comparing it with 7,55,000 as we have already computed in the last slide. We got the figure of funds generated from operations, the balancing figure of 5,95,000. I hope now you can easily go with the first two steps of fund flow statement analysis, and you can practice it from the different books available on the financial statements analysis. Thank you so much for your kind attention. Thank you.